5 presidents in 2 weeks. Prices doubling before the shelf gets restocked. This is Argentina right now, and it is not the first time this has happened. Grocery workers change price tags by the hour. Money loses value faster than people can spend it. Outside, crowds gather at the pink presidential palace. Leaders come and go so fast the door barely stops swinging. The currency has collapsed against the dollar again and again. This is not one bad year. This is a pattern. It would be easy to film the version of this story where Argentina just kept rising. That video would be a lie by omission. Before going further, subscribe because the mechanic hiding inside this collapse explains half the headlines you will read this year. Now here is where it actually gets strange. Because a century ago, Argentina was not poor at all. It was one of the 10 richest countries on the planet. A Nobel-winning economist once joked there are 4 kinds of economies: developed, underdeveloped, Japan, and Argentina. To understand the joke, we need the booms, the busts, and why this latest crash refuses to follow the old script. Argentina was never supposed to struggle like this. It has some of the richest farmland on the planet. It has cattle ranches that once fed half of Europe's dinner tables. It has a productive, growing population and a landmass built for both farming and industry. So, money poured in. European investors and American capital flooded the Buenos Aires docks. Waves of European immigrants arrived too, bringing savings, skills, and new mouths hungry for Argentine beef. Back in Europe, red meat had gone from peasant food to luxury. Argentina became the world's butcher shop. By 1905, the average Argentine was nearly as wealthy as the average American, as wealthy as the French, as wealthy as the British, as wealthy as the Germans. There was a catch. The politicians running this boom were deeply corrupt, and the wealth was split unevenly. Most of the new fortune went to the European newcomers, not the workers who were already there. Still, the boom looked unstoppable, but nothing built this fast stays golden forever. In 1914, the First World War tore Europe apart. Argentina stayed neutral, but neutrality did not mean untouched. Immigrants from nations now at war with each other suddenly eyed one another with suspicion on the same streets. Worse, the countries pouring money into Argentina were now broke, busy fighting the bloodiest war the world had ever seen. Investment dried up. Argentina's export ships sat idle at the docks with nowhere profitable to sail. Then in 1929, the Great Depression hit, and luxuries like beef on a European table vanished overnight. Argentina's dinner tables emptied along with the export contracts. The golden boom had gone quiet. For corrupt leaders who had grown rich off the boom, this was a real problem. Their income was disappearing. Meanwhile, ordinary citizens who had tasted rising prosperity were growing restless in the streets. So a deal was struck with Britain, the country's oldest trading partner, to try to reignite the boom. The terms gave Britain exclusive rights to sell coal to Argentina and to control its prized meat industry. It gave exports a small boost. It also handed Argentina's own signature industry to a foreign power. Only heavy corruption explains why any government would agree to terms that one-sided. The deal accelerated the decline instead of fixing it, and the streets erupted into unrest and coups. And a government that gets overthrown by force is the last thing a foreign investor wants to see. Foreign capital fled just as Argentina desperately needed it to build new industries beyond meat. Into that gap stepped Juan Perón, promising sweeping reform and a wave of nationalized heavy industry. It worked for a while. Then the rest of the world finished rebuilding after the Second World War and got angry. Their assets had been nationalized, and Argentina had openly welcomed the very war criminals the world had just fought to defeat. So nobody wanted to trade with Argentina or invest in its shiny new factories ever again. The nation grew poor again fast. Perón's popularity collapsed, and yet another coup followed. This became the pattern. Sweeping reforms fixed one problem and broke 3 more, over and over. The nation swung from total state control to raw free market capitalism and back again, decade after decade. Each swing shattered a little more trust. Families stopped believing tomorrow's rules would match today's. No one builds a career, a business, or a retirement fund on ground that keeps shifting underneath them. That explains the instability, but it does not explain why Argentina broke this way while 2 very similar countries did not. Canada and Australia started the 20th century almost identically to Argentina. Similar populations, similar settlers, similar resources, yet Canada and Australia kept climbing, while Argentina kept falling back down the same hill. Economists call this puzzle the Argentine paradox, and solving it means asking what these nations did differently. The first theory points to land. Once the open frontier closed, these countries needed a new way to grow. Argentina's farmland was smaller but far richer, so fewer families ended up controlling far more of it. Fewer farmers with more land meant more power concentrated in fewer hands, and more room for corruption to grow. Canada and Australia had the opposite problem. Vast, lower value land that spread ownership among many more farmers. The second theory is about inherited government systems, and it is a little more controversial. Canada and Australia inherited British-style parliamentary systems built around stability and balance of power. Argentina inherited a Spanish colonial style of governance built for speed and control, not institutional patience. Which system would you trust with your savings? Drop your answer below before we keep going. It is telling that former British colonies average roughly 50% higher income per person than former Spanish colonies. But the most compelling theory came from a 1992 research paper out of Madrid about property rights. Remember how Argentina's industries kept getting seized by the state, then sold off, then seized again? That flip-flopping made people terrified to invest a single dollar in the country's future? And that fear feeds directly into the real mechanic behind all of this, which is credit. Picture a skilled dentist offered a business loan at 2% interest, paid back over 40 years. Easy decision, steady repayments, plenty of time, and a growing business at the end of it. Now offer that same person 20% interest, due back in just 5 years. Suddenly it is a terrifying gamble. Nations borrow money on exactly the same terms. Stable countries get the dentist deal, unstable ones get the gamble. The United States, Canada, and Australia borrow cheap money over long decades. If this is already surprising you, subscribe, because the real mechanic behind every one of these crashes is still ahead. Argentina gets forced into short, expensive debt, the kind that has to be repaid before the next election even happens. So while Canada and Australia got to grow like patient business owners, Argentina stayed trapped like a desperate employee. For every family that trusted the peso and watched savings evaporate, someone holding gold or dollars walked away untouched. For every business that could have expanded on cheap credit, 3 others quietly gave up before they even applied. And every time trust broke, Argentina lost more than money. It lost its seat at the table of stable nations. One more wound came later, a war fought against Argentina's own oldest trading partner, Britain, over the Falkland Islands. That war ended a trading relationship stretching back a century and slammed one more door on foreign investment. Each of these wounds did the same thing. They frayed the thread of trust that credit is actually built on. And a frayed thread does not heal on its own. It just keeps snagging on the next crisis. Decade after decade, the same cycle repeated. Boom, overreach, broken trust, collapse. Then someone promises to fix it all again, which brings us back to today and to prices changing before the ink on the receipt is dry. Ordinary Argentines now trade pesos for dollars on street corners the moment their paychecks land, just to protect them. This is not irrational panic. And as a population that has learned, over a century, exactly how this story ends. But there is one theory that ties every single crash together better than any war, coup, or bad harvest ever could. Follow the money far enough back, and every version of Argentina's collapse leads to the exact same broken promise. Which is why Argentina has gone back to the International Monetary Fund for a bailout more times than almost any nation alive. Each bailout buys a little time. None of them fix the underlying thread that keeps fraying. When a nation defaults on its debt, the world does not forget. It simply raises the price of trust next time. Argentines have lived through frozen bank accounts, where their own savings were locked away overnight by government decree. There is a single thread running through every one of these moments. A gilded thread of trust that either holds a nation together or lets it unravel. That same thread runs from a 1900 cargo ship all the way to a modern city skyline still chasing stability. Trust, it turns out, is a currency in itself. It just does not show up printed on any bill. Nations with a strong thread line up for cheap, patient credit. Nations with a frayed one pay dearly for every dollar. Look at the interest rate a country pays on its debt, and you are really looking at how much the world trusts it. In 2001, that thread finally snapped completely, and Argentina burned through 5 presidents in 2 weeks. Citizens banged pots and pans in the streets, furious at banks that had frozen their life savings overnight. If this thread of trust is the real mechanic, subscribe now, because understanding it changes how you read every economic headline afterward. From here, that thread only pulls tighter, wrapping around every part of Argentina's economy at once. The crisis of 2001 was not new. It was the Belle Epoque boom's unpaid bill finally arriving. Now watch how this single mechanic explains every boom and every bust Argentina has ever had. Here's the mechanic in its simplest form. Trust lowers the cost of borrowing money. Broken trust raises it. Kept promises compound like interest, quietly building a fortune of credibility over generations. Broken ones compound too in the opposite direction, making every future dollar more expensive to borrow. Argentina has defaulted on its debt more times in the last century than almost any other economy on record. Here's the part most people get backwards. More government control does not automatically mean more security. It often means less trust. When Perón nationalized foreign industry, he was not just seizing factories, he was snapping the very thread investors relied on. When Argentina signed away its meat industry to Britain, it was not building strength. It was buying a shortcut with borrowed dependency. Every flip between nationalizing and privatizing the same industries shortened the leash of credit a little more. Compare that to nations with an unbroken thread. Their skylines simply keep rising, decade after quiet decade. Nations with a frayed thread stay locked in the same cycle Argentina has lived through for 100 years. The gilded thread runs right through the middle of that skyline today, stretched thinner than it has ever been. Argentina's leaders keep promising this time will be different, and the crowds keep listening, hopeful and wary at once. So will it actually be different this time, or is this just the next turn of the same century-old wheel? Tell me what you think it will take down in the comments. A newer administration has tried aggressive austerity, slashing spending fast in an attempt to finally repair the thread. The pain lands immediately. The hoped-for stability, if it comes at all, takes years to prove itself real. Financial markets have responded with cautious optimism. A small green tick upward after a century of red. But investors have been burned by Argentina's broken promises before, and they are watching every move through narrowed eyes. This is not just a country-sized lesson. The same golden thread runs through every personal credit score and every kept promise. Break trust once, and every door that could have compounded your wealth quietly closes a little further. Keep it even when it costs you something now, and the path ahead stays wide open, lined in gold. Zoom back out, and the whole globe is wrapped in threads like this, some gleaming gold, some frayed to almost nothing. Fast forward the whole 100-year timeline, and Argentina's boom-bust cycle plays out in seconds, over and over. So the real mechanic was never really about politicians, wars, or even Perón himself. It was always about trust, priced in interest. Everything else, the coups, the deals, the nationalizations, was just the thread being pulled, tested, or cut. Argentina stands today on the edge of a cliff, walking that same gilded thread like a tightrope over the drop. One more snap, and the country falls back into the same cycle it has lived through for a century. Hold it steady, and Argentina finally gets to trade in its short, expensive debt for the dentist deal at last. Every nation and every person is really just walking their own version of that same golden thread. Standing over Buenos Aires tonight, the lesson is simple. Money follows trust long before it ever follows policy. That gilded thread runs from a 19th century harbor all the way to whatever headline about Argentina you read next. If this changed how you read the next headline about a collapsing currency, that is exactly what the like button is for. So tell me honestly, if your own savings were losing value by the hour, what would you actually do with them? Subscribe for the next thread, because next time we are following the gold itself and the choke point one country controls that could freeze half the world's trade overnight. 5 presidents in 2 weeks was never really the story. It was just the moment the thread finally showed itself. And the next country to pull on that same thread will find the exact same lesson waiting, gilded and unforgiving, right where Argentina left it.